The roots of the 2008 crisis began in the housing market.
Easy credit made mortgages widely accessible.
The roots of the 2008 crisis began in the housing market. Pedestrians walk by, largely oblivious to the underlying risks, contributing to the illusion of widespread financial health.
These mortgages were bundled into complex securities.
Investors around the world bought these mortgage securities.
Wall Street rapidly expanded the market for structured finance.
Demand for homes continued, pushing prices higher.
Household debt grew rapidly during the housing boom.
Leverage quietly increased across the financial system.
Risk models suggested the system was stable.
Many mortgage securities received high credit ratings. Investors trusted these ratings and kept buying.
Confidence in financial markets remained extremely high.
But beneath the optimism, systemic risks were growing.
By 2006, the housing market had reached its peak.
Demand for homes began slowing across the country.
Subprime borrowers started missing their payments.
Mortgage-backed securities began losing value.
Confidence in the financial system began weakening.
Banks began reporting losses on mortgage assets.
Mortgage securities lost credibility among investors. Financial institutions faced growing balance sheet pressure.
Banks became cautious about lending to each other.
Liquidity across financial markets began tightening.
Credit markets began showing serious instability.
Large investment funds suffered sudden losses.
One major investment bank nearly collapsed.
The Federal Reserve stepped in to stabilize markets.
But the financial system remained dangerously fragile. Mortgage defaults continued rising across the country.
Banks reported billions in losses.
Volatility spread rapidly across financial markets.
Institutions struggled to obtain short-term funding.
The system moved closer to a full financial crisis.
Major investment banks faced mounting pressure. Confidence across markets began deteriorating.
In September 2008, Lehman Brothers collapsed.
Panic spread rapidly through global markets.
Credit markets nearly stopped functioning.
Investors rushed to sell risky assets.
Financial institutions struggled to secure funding.
Assets were sold rapidly to raise cash.
Losses spread across the financial system.
The crisis became global.
Major banks faced the threat of collapse.
As the capital stands witness to the unfolding crisis, the weight of critical decisions hangs heavy.
The Federal Reserve launched unprecedented rescue programs. Authorities moved to stabilize the financial system. Slowly, panic began to ease. As the financial crisis took hold, the impact bled quickly into the real economy, leaving behind a somber sense of stagnation and loss.
Businesses began cutting jobs and investment.
Millions of homes entered foreclosure.
Global economic activity slowed dramatically.
Policymakers began examining the causes of the crisis.
Regulators introduced new rules for financial institutions.
Banks were required to strengthen capital reserves.
Advanced surveillance allows us to monitor systemic risk in real time. This level of oversight is crucial in the post-crisis financial landscape. Financial markets gradually regained stability.
Economists studied how the crisis unfolded.
Financial markets slowly began recovering.
Banks were forced to hold stronger capital buffers.
Regulators are now monitoring systemic risk more closely than ever. These interconnected stability frameworks provide...
Policymakers debated how to prevent future crises.
The 2008 crisis became a defining financial lesson.
Modern finance remains deeply interconnected.
Credit cycles continue shaping economic expansion.
Periods of optimism often return to financial markets. Yet systemic risks can quietly accumulate.
Understanding these patterns helps explain crises.
Financial crises have repeated throughout modern history.
Each crisis, Hesed, reveals weaknesses in the system.
The cycle of risk and optimism continues. The early stages of crises are often invisible.
And by the time panic appears, the crisis has already begun.